All right, everyone, it's time for a new video. This one is going to be a bit shorter than usual, but I want to talk about the things that have come true that I was warning you about. And that is the Fed selling assets off their balance sheet, which they announced that they will do in May. So we are less than a month away. May 3rd and 4th is the FOMC meeting, and they want to sell $95 billion a month off the balance sheet. And I told you in my previous video that that was my fear and the reason why the markets will crash, not the increased interest rates that are also going up to be 1% after May in total, but the fact that the Fed will sell assets off the balance sheet will crash the markets. So if you watch my channel, you know that I explained quantitative easing. So if quantitative easing stimulates the economy by creating artificial demand, then that will increase prices, right? So if I do quantitative tightening, which is the opposite, I create artificial supply, which will decrease the price. And a rapid decrease in price is also known as a crash. CPI numbers came out yesterday, and they were 8.5% for the month of March, which is the highest it has been in a long time, and the highest it has been since the stimulus of trillions of dollars started right after the COVID crash. I just want you to keep in mind that how the CPI is measured is extremely inaccurate, and it doesn't take into account the things that are actually going up with inflation, like agriculture, food prices, look at oil prices. Those things are largely not included in how the CPI is measured today, as in comparison with the CPI measured in the 70s. We would have inflation close to 20% and not only 8.5%. So now that the stimulus is over and the Fed is raising rates and selling assets, inflation will peak. The question is, what is the Fed going to do when the economy crashes? Is the Fed going to reinflate the bubble and announce a new round of stimulus and 0% interest rates? Or is the Fed going to fight inflation like they claim that they will do? I think the Fed has to let the recession happen, because if they go back to stimulus and QE, inflation will take off, the Fed will lose all credibility, and commodities will go vertical. And before I end this video, I also want to give you a quick tip for when the crash happens. So we see stocks outside of commodities already going up based on any amount of good news that is out there. And I don't know how much longer the Fed can keep this bubble inflated, because the more it inflates this bubble, the bigger has the asset sell-off to be to bring the inflated markets back under control. So I want to give you a tip for the actual crash. So when the initial crash happens, so the first 20%, 25%, whatever it's going to be, you will see everyone pouring the money back into the markets, buying the dip, so to speak. Don't fall for it. Hold your cash, because the actual crash is going to happen right after that. The Fed is going to rub their hands together and initiate the actual crash, which is going to happen once everyone put their money back into the markets buying the dip, because they need you to lose money to deleverage the markets and reset everything so they can go back to stimulus after that. Anyway, I guess we will find out together, but before I go, please like my content, follow me on YouTube, follow my Patreon blog, check it out. I post 5 times a week a market update that helps you with investing and understanding the fundamentals of economics and how you can use that for whatever strategy you're using. So please check that out, links in the bio. Thank you for watching, and I see you next time.